Hey everybody, welcome back. We have a lot to go over today, so we're going to keep the intro real short because we have a lot of topics going on out there between the Red Sea, what's going on with Bitcoin, the Bitcoin names, what's happening with Tesla, smart money, dumb money. We're going to dive into and spend a lot of time on this, but I want to just go through just the absolute basics here so we can see what's happening. If you take a look at the ES, you can see right here you're sitting at 4811. NQ, look at that reversal. I just have a very simple 9 EMA in here today to get into this. We're not going to get into all the details and all the technicals because we really don't need to. This doesn't get more obvious. And if we take a step back and just get rid of the futures market for a second, look at this. All right, this doesn't, again, it doesn't get more obvious what's going on. So don't delude yourself as to what's actually happening and what we're saying. This is where you're at. This is a cup. This is a handle. This is a breakout of it. There is an upper channel out here that is set to go substantially higher, period. That's the way it is. Start thinking about the events that could happen that could actually rally the market and actually take the market down considerably. The Red Sea is a wild card right now, and we need to spend time on it. We do. But I want to show this on the SPX. I want to show you this on the Qs. I'm going to clean up all my nonsense for a second and just spend a moment and get out of your own way and just look at what's actually happening. Right? I don't need any fancy indicators. I have a very simple 9 EMA here just to show you, right? We can all sit here, we can all placate, we can all play games. The bottom line is this is a cup, this is a handle, and you've broken out. Does the breakout last? You want to bet against it? That's fine. You can do that. And there are events out there that we should go through that you should be paying attention to. But this is what's happening, and this is what you have to focus on. If we take a look at the TNX, just for the simplest of reasons, and we just mark that 4% level, you can see what happened. Look, you rejected it. That's a 9 EMA. That's all it is. Let's just say that this is the current control bar that you tried to get over, and you were unable to. You've been unable to get above that 9 EMA on the weekly. People say don't chart your, you don't want to chart the yield. I chart everything, and go from here. Let me just show you this. I apologize for the voice. I'm on the tail end of this thing, so just bear with me and bear with the crackling voice. I usually sound a lot cooler than this, but this is what you got today. I don't know what happened there with that one, and I don't really want to edit, so we're just going to drop another one right there and pop that in. Okay, so what's happening there? Well, you're breaking these. All right, so where's the next one that you would break to, right? You just look at this as kind of like a fan, and you see that you broke that one as well, and then you tried to get through it, and you couldn't. So they're going to keep walking you down on this. I'm not saying you're going to 3%, but this is heading in the direction of down. Even with the high CPI, which we're not going to spend a lot of time on, and what could happen in the Red Sea could cause an issue. And the confluence of what's happening right now with smart money and dumb money being on the same side, but one of them is moving faster. When we go through that, it's absolutely crazy what's going on there. And there's a litany of things out there that we could be talking about. We could be talking about all the buyouts. Does this get bought out? Does CYTK get bought out? Does it not? DocuSign, they're on the chopping block right now. Do they get bought? Do they not get bought? They're up on the auction block right now. You don't see companies like IMGN getting taken out at 100%. You don't see this kind of stuff when companies are getting bought at 100%. If you're going to, look at this one. This is one no one's even talking about, that JP Morgan. No one's even talking about this. Just another 100% buyout. No big deal. And people are trying to figure out why XBI is going up, right? I mean, it's obvious that this sector is completely beaten down. These are the things that are obvious that we're not going to spend a lot of time on because there's some real big issues out there like smart money, dumb money, the Red Sea, what's going on with that Bitcoin train and why people got it so wrong that we have to spend some time on, that people need to understand this. But understand that when we're looking at the indexes and then we dive into the sectors and you're seeing these breakouts, do you think you're in a strong market or a weak market? I mean, you could sit here and prognosticate and we can see moves over and over again, but let's look at what's happening. Microsoft, all-time highs. Does that happen in a weak market that's going to break? Apple's acting awful, but maybe we're finally going to flip that 55 SMA if we take a look at it here. Right? These are the basics, and you're not able to for whatever reason. We also should spend some time with what's going on with Taiwan because people need to understand how that's going to play around with Taiwan Semi that's coming out with earnings next Thursday. So there's a lot of this stuff that we really must pay attention to, but I don't think people truly are grasping the concept of what's going on with the market and what they need to focus on. Instead, what they're doing is they're trying to find a reason why, and I'm one of those people that does it as well. You always want to know why the market's doing what it's doing. But there are just times where you just have to start looking at it and going, okay, well, no matter what's happening, we seem to keep pushing higher and they keep keep seeming to rotate. It doesn't mean that some sectors didn't get ahead of themselves, right? Like we start looking at XLRE, and they've been flat for about 4 weeks now. You start looking at the REITs out there and how they're selling down, but they're still nowhere near down from here. Sure, there's issues out there. We could talk about the JP Morgan reversal that happened on Monday, but I think this might be more tied to the Red Sea than anything else. But the most important thing is we have to understand where the players are right now. So let's take a look at smart money, dumb money. Now, in front of us is smart money, dumb money, and what we're looking at is 3 years. We do not refer to this as smart money. We do not refer to this as dumb money for those that are new. We refer to this as institutions, and we refer to this as retail. Institutional traders and retail traders. This is predicated upon one major thing. The vehicles that are traded determine whether it is smart money or dumb money. So for our purposes, if you're trading ETFs, that they say that's dumb money or retail. Smart money is, quote, the institutions. But we like to refer to it as institutions and retail traders. And it gives us a better understanding. The black line, for those that are new, this black line right up here, that is the S&P, and here's your ledger, so you can see the colors and where you're at. Now, we're noticing something that we never really see, and I think it's definitely worth paying attention to, and then we can talk about what does it mean and what should we do with it. Now, you're seeing smart money crack, and usually when that happens, what does that mean? That usually means that we're going to have a problem. That usually means that we're marking a high. Now, just for record's sake, if we take a look right here, put a little slash there, and you come right up in that same area, you can see that this led to more of a decline as retail sold. We never know how deep it's going to be, but it usually leads to some kind of sale when we get to this 70 line right here, and then we break it. And we've gone over this ad nauseum. I don't even like to use this data. We know why. It was just really a very difficult time to think you know anything about the market with the way they just kept injecting money into the market. But point being, and the point of showing this is at the end of the day, when you break this line, you tend to be marking a top. When you flip here on smart money, that's what you want to see because that usually leads to some kind of rally. So when you see it here, it usually leads to a kind of a rally right in here, right? All right. So we understand why this is important, and we understand why it's something that we want to pay attention to. There's also this spread in between these two. And when the spread's the widest, which it usually is, well, that's what you have to pay attention to because it's really the spread that's the issue. But this is really kind of weird. And I don't really have a strong answer for it, but it's definitely something that we should be looking at, trying to figure out what the heck's going on. So we have smart money, they were buying, and then they stopped buying and they started selling. And then at the same time, dumb money, they stopped buying. They're completely maxed out. If you take a look at this 3-year level, like this is an ultimate level. They're completely maxed out. And what are they doing? They've stopped. Excuse my voice, but I'm still getting over this, the cold. But what are they doing? They're getting to that point where they're both selling. Well, if they're both selling, what the heck is going on here? So something does not add up here, but it's worth paying attention to. So we could argue that the spread's gotten tighter and that one is selling faster than the other, and that might be it. Therefore, we could look at the spread because there's a spread between these two, and we'll take a look at that in a moment. But I found this really interesting that we've cracked here. We're waiting for this signal. That's why it's so important to understand what it is that you're looking at, because when you say it, and it doesn't do what you want to do, you want to understand why. So now what we're saying is they're saying that smart money and dumb money are both selling. Okay, let's drill into this a little bit further. Again, when you are at a level here where you're cracking, and we'll just mark this in purple, it's usually it, right? You kind of filter down, then you kind of need to crack a level here. And then when that starts to rally, sometimes you get a little bit of a lift. You really didn't get it here. You started to get it here. And then you started to get it here, right? But you didn't really get it this time. And that's kind of interesting. And now you would think, well, why didn't you get it this time? Well, you didn't get it so much this time because at the same time we were trying to rise, maybe the selling of retail did it. And then you're trying to rise here. But at the same time, this is rising as well. So when you start drilling into it, is it that different, right? Because it seems like everybody's doing the same trade after December because you have the big interest rate trade that happened, right? So maybe that's it. So again, what you're trying to do is you're trying to figure out what's going on. But if you get to that mid-December date, which is really the Fed meeting, and you start looking at this, well, they were buying roughly at the same time that we started getting really giddy up here being retail. So maybe that's something that we should be paying attention to, and maybe it is just one big trade, and maybe there is no differentiation now between this. So then the question becomes, how do we use this? Well, for our purposes, I think you're better off looking at it as one big trade, and then what we should be looking at is, what are these differences between these two lines? And is the difference between these two lines, is it getting wider or is it staying the same? Because As it gets closer together or as it gets wider, that tells you more about what's going on with the market. Right now, if you're looking from this perspective, there was a period here where you were pretty close, and now you're getting a little wider. But then also at the same time, you're nowhere near as far apart as you were back here. So now what we're going to do is just spend a moment and look into the spread. Now, before we look at the spread, what's really important to us is to understand what the heck are we actually looking at. So this spread is going to have you'll see it in a second, but you're going to have a determination of, are you going up to positive or are you going down to negative? And let's understand this is from Sentiment Trader, and this determines dumb money, smart money, but set in a spread. When it comes to positive, however, the sentiment has reached an extreme and they often run into trouble, meaning too positive. This usually happens because dumb money rises above 60%, smart money drops to 40%. That is a warning sign for stocks. That's exactly what we were just talking about in the other graph. When you get above 60 and then you break it, you usually find yourself in an issue. Meanwhile, if you're below 40 and then you start rising, you want to be involved. All right, so if we understand that and we understand how this is going to work, then what we need to do is start going through this. When dumb money is below smart money, then sentiment is negative and stocks usually struggling, okay? It's best to be defensive. Okay, that makes sense. However, when sentiment becomes too negative, then stocks are often poised to rally over the next 1 to 3 months. Too negative seems like something that you would have to find a way to define. This usually occurs because the dumb money has dropped below 40 and smart money has risen over 60. Okay, this is where it gets interesting. Now let's take a look at this. So in front of us, we're going to go from July 19th to 2024, and we're going to focus on Sentiment Trader, which is what this is. Smart money, dumb money. We refer to this as institutions and retail. And what we're going to do is just say, okay, well, right down here again, right? And we start to look at that and go, well, we broke, and so now we're kind of in this wonky little spot right here, aren't we? Where we're negative again. Well, is this too negative? Or is this not negative enough? See, that's the part of like this, how you really don't know. And what I don't want to do is I don't want to do anything that's going to include anything really that happened. You don't really want to include anything that really happened after, March or April, like in here, because they just injected so much capital into the market. It's really hard to utilize this. So then let's just say, for sake of argument, we're not going to use this, right? Because of that, we're going to just take this out and we're going to say we're not going to use that. And so then we go, okay, well, what else do we have? What else could we use? Well, we could use this before it even happened. And we can see that in here, when we were down this low, market ripped because you were too negative. Market ripped. Why? You were too negative. So there's something to that. Market did not rip, maybe because you were just negative enough. You're starting to split a little bit of hairs here, right? So when we start to look into this, I think it's very important to do this, and you just kind of take a look. Well, that January 23rd, that's when we ripped in the market, when we were this negative. And then you go look at July 28th, and we did great in July until we started to fall apart a little bit, right? And we all know, why that fell apart. But I think this all fell apart right here because of Japan. So like when we start to look at this and we try to understand what's going on, I think the easiest way to do this is to kind of get into some more data that's a little further out and start trying to understand it. So I did that. I went out about 10, 20 years. I found that tells you that relative, when you're that oversold, it's more on a relative basis. And I'm not going to bore everybody with it. We're going to go the other way with it. But I found that it's a relative basis, meaning that it's more important that if you're here, right? Like let's say that you're here and then this one's here. And then when you're here and you undercut one, right? I found that that's more important. So in other words, the undercut of another one to get more negative is justified versus you're undercut and you don't undercut it, right? So like I'll give you an example. See how you're down and this one worked because you undercut that one? I think there's something to it that way, and that's how I'm utilizing it. So what I'm suggesting is that, yep, you're negative, and they're saying when you get too negative, but I think too negative is a relative number. And I don't know really how they're going to get us there. I'm going to tell you how I'm going to get us there to make that a relative number. So I'm going to say that it's relative and it's too low if you can't even get underneath it here, which is kind of the antithesis of how they're looking at it. They're saying, oh no, it should undercut here. I'm saying no. What I'm saying is that if you're here and you can't even get to that level, then that's telling you what the issue is. So I'm looking at it as I want to pay attention very clearly. Let me get this back. I want to pay attention very clearly to what's happening down here. And the fact that we can't take out that lower low, that's telling to me. So I want to watch this. And it does make us a little more aware that we want to pay attention to this more than we want to pay attention to anything else. In other words, maybe we don't want to look at smart money and dumb money as much because they're moving in tandem. What we really want to do is go, wait a minute. They've been moving in tandem since probably here. Like watch what happens when we do this. Well, they've been moving in tandem since about here. And since they've been moving in tandem, and the spread's getting tighter. Remember we said the spread's getting tighter even though they're both doing the same thing? what's happening to the market? Market's going higher. So as this spread goes higher, it's possible that this market goes higher. And I think that's something that we should pay attention to. You look at this one, you go from December on, that's exactly what's happened. So I think that's the better way to use smart money, dumb money right now. And what people will say to me is sometimes you go into a lot of this detail and then I don't know what to do. This is what I'm trying to explain, and this is where my head is with it so that I'm very clear. I think looking at smart money, dumb money, and the divergence between them is not as pertinent as the fact that the spread is getting tighter. On a relative basis, I think that you are way more negative than you should be on the spread side. And I think that that spread as it gets tighter is going to feed in. And I think that's what's feeding equities. So I hope that's clear. Feel free to comment below. That's why there's a comment section to actually discuss it. You could have a completely different opinion about this, and I would legitimately like to hear it. Now, the single largest issue this week is the Red Sea and what's happening over there. And what I want to point out is that this has been going on for some time, and quite frankly, they just have not been honest about some of the costs about what's going on over there right now in Israel. I know, shocker. But this started all in mid-December, and you can see right here, let me just circle that so you can see what I'm talking about. That's the date. This article, I believe, was on CNBC International's website. And some of these articles in here are going to be from Al Jazeera and other places around the world because, shocker, once again, they weren't exactly forthright about coming out with information. So it's going to be from a myriad of sources, and just pay attention to this because you need to understand what the issue is when you're starting to look at names like ZIM, FRO, TNK, Maersk, and what's really going on out there, and then how this is going to affect. Shipping giant begins to reroute ships through the Red Sea. Why do you care about this? If it takes longer to get your goods or they have to reroute the goods go up in value. If the goods go up in value, inflation goes up because the cost of goods goes up. But this is, besides the obviously humanitarian issues that this is a disaster, this is why from a stock standpoint, you care about this. All right, this could be the reason, see when it started, this could be the reason that you start seeing issues with CPI and PPI. So we picked up on this early January. We didn't pick up on it mid-December. We started picking up on it early January. And I picked it up through Goldman. Goldman had this huge research report and it kind of blew my mind. Not kind of blew my mind, absolutely blew my mind. Since this conflict, this is January 4th, you'll see some of the dates stamped here in a minute, but these are shots from our community. And what I'm showing you is how we saw this playing out after reading Goldman research. Reading research, for those that don't understand, is not inside information. It's an actual research, fundamental research report, which the majority of traders would do substantially better if they did some level of fundamental research. Considerably better if you understood what the actual issues are. No place was that clearer than what was happening with Bitcoin this week. But we're going to get to that. So there's so many topics to go over this weekend, which is kind of really cool. And again, excuse the voice, but we're fighting the cold, but the show goes on. Red Sea shipping lane is a mess. We're off by more than half. This is staggering. Our news isn't even picking it up. This is January. We're not even picking it up on the news. CNBC is not even talking about it. They're talking about Kramer hitting a horn. It's mind-boggling. So no significant rise in oil tanker freight rates since the disruption. Apologize that this one's a little cloudy. Oil tanker freight rates, Red Sea disruptions. So they weren't even raising the prices yet. They weren't even raising the prices as of January 4th. So we're not even seeing the true impact on this. So you have to understand it's all connected. We're not even seeing the true impact on this on pricing yet. They haven't even raised the rates yet. They're going to have to raise the rates. They're not going to have a choice. Rates have not risen to do with Maersk saying they stopped. So Maersk came out and just said, you know what, we gave up. Then they started again, if you remember, and then they gave up again. The second time they gave up, that's when the US and UK stepped in. Just FYI. I don't see how STNK and Sting, they'll get more per rate. I don't see how the disruptions do not help ZIM. I've had a great trade in ZIM. We saw how it rallied on Friday and then how it sold off. We're going to get to some of these names in a second here. That straight is being much more disrupted than we are being told. Shocker, we're not being told the full story. And you can see the dates up here, January 4th, in the time that I went over this. Red Sea disruptions have lowered oil flows throughout. I'm not even going to try this. We did spend some time on this in some of these public videos on Saturday, going over this being an issue, and December 18th, but call option applied volatility remains modest. Now, why is that interesting? So they're telling you when they came out with the issue, right? Call option implied vol remains modest. Well, they don't see an issue. So even though they're aware of it, they're like, it's not that big a deal. All right, so the Permian oil production growth edged up. So they're telling you that Permian oil production since October is doing what? Drilling productivity report, what's happening there? It's going lower. See the problem? Libya crude oil production nowcast increased this week. So now we're getting oil from Libya. Can't make this up. Okay, so you see how this is starting to rally and just starting to explode? Because now they need oil production. Where are they going to get it from? Wherever they can. Okay, this is the game and this is just the way it is. So you can see how this is playing out, right? Libya crude production. And just look how it's rallying. Secondary sources of OPEC, IEA realized monthly, Goldman's forecast. Here's your forecast on what you're supposed to get. And look what just happened. Look when it exploded. Then you come into the 5th. So we went from rerouting to we're now just going to completely avoid the area. That was on the 5th. We went from rerouting to now we're just going to just avoid the area. Takes us to today. U.S.-UK warships shoot down Houthi barrage in Red Sea as U.S. considers retaliatory strikes in Yemen. So a couple things about this. All right, so let's just keep this on point. A couple things about this. Retaliatory strikes in Yemen. I wasn't aware that the U.S. was attacked by Yemen. So this kind of stuff is when you start watching the language, right? Start watching the language that's happening here, right? I'm not going to I'm not going to put on the tinfoil hat. I'm just going to tell you, just start watching the language. Retaliatory. So, we didn't do it. They did it. I wasn't aware that we own land in the Red Sea area. So we're going there to represent the interests of, one, corporations, and two, other players that are in that area, right? That's why the U.S. is involved. That's why the U.K. is involved, right? So these types of things don't usually resolve themselves in a weekend, right? And I want to be really clear about that with the language. U.S. considers retaliatory strikes. That implies that this is going to go on for some time. That's the best way that I can explain it, the clearest and most objective way that I can say it. Secretary of State campaigns to contain regional conflicts. So you're trying to contain regional conflicts. At the same time, you're considering retaliatory strikes in Yemen. I mean, you can't make this up, right? We're going to continue to bomb areas that we consider doing things that we don't want them to do. And at the same time, we're going to try to contain the conflict as we increase strikes in Yemen. Honestly, you can't make it up. I'm trying to stay as objective as possible as I go through this, but you have to understand, when you start to look at this, you can just see where this is going. This is going towards where this is going to be going on for some time. Why do you care about this, besides from the humanitarian front? You care about this because if they disrupt the Red Sea, which is exactly what they're doing, they're going to make it worse by getting involved, right? There's nothing worse than hearing we're from the government, we're here to help. Okay, when we get involved and when we start doing this, and I'm not saying what these people are doing, I'm not saying that it makes any sense what they're doing. That's not what I'm saying. Where I'm going with this is when we start to get involved or when these conflicts start, they don't end in a weekend. This takes a long time. So this idea, this is why this is so important to me from a stock standpoint. We're all expecting inflation to drop. What if the cost in goods for some reason go up because of what, right? Because of disruption. Now, if that happens, that's a completely different ball of wax than we haven't even thought of. See, you're not always just looking for the new idea, right? Because the new idea was inflation is going to drop, right? You're also trying to figure out all the time why your new idea that inflation is going to drop might be wrong. That's half my battle, so you guys understand that. Well, I think inflation is going to drop, but I'm spending, I want to know the secondary reason, the tertiary reason, the fourth, the fifth reason why I could be wrong. Because that way, when I see them, I can adapt to it. If people thought like that with the Bitcoin trade, they would understand that it was probably one of the greatest short opportunities out there. Instead, most people ran into it. It's like running into a burning building. But let's stick with this burning building. Campaign of attacks and ships transitioning to the Red Sea. U.S. coalition launched more than a dozen strikes against rebel targets. The rebels. On Thursday, the strikes were intended to reduce campaign attacks on ships transitioning to the Red Sea. So here we go. January 10th, this is when this comes out. Okay. January 12th, this is last night. So bear with me. We are getting somewhere with this. Hopefully you're understanding the magnitude of the issue so far. Hopefully you're understanding not only the magnitude of the issue, but the fact that they have pretty much been hiding the actual issue from us until companies like Tesla had to come out and say, by the way, and I think they're using that as a smokescreen, and we're going to go through Tesla in a moment, but by the way, we're going to basically shut down the Berlin plant because we can't get anything to the Red Sea. And this kind of stuff happens during election years as well. So 11 o'clock Eastern Standard Time, great time to come out with, quote, news. The U.S. military early Saturday struck another controlled site in Yemen that it had determined was putting commercial vessels in the Red Sea at risk, which it very well could have been. Multiple airstrikes targeting. And I want to be real clear about this. I'm not suggesting that they should be remotely doing what they're doing, right? But this is again, here we are. We're here to help, all right? And we know how this goes. And we know that it's not over in a weekend, all right? So in one sense, they're saying, well, we're trying to quell what's going on. In another sense, we're going to bomb you. All right. It's an issue. And this stuff never gets resolved the same exact way. Associated Press journalists in Yemen capital heard one loud explosion. U.S. Central Command said the follow-on action early Saturday local time against Houthi radar site was conducted by the Navy destroyer Carney using Tomahawk land attack missiles. U.S. military strikes another controlled site after warning ships to avoid parts of the Red Sea. So let's explain what's happening here. So now the U.S. military, hi, we're here to help. Okay, now they're telling them that you should avoid parts of the Red Sea. So we went from corporations saying, hey, we need to, divert this area, to some people trying to figure out how they could actually work in that area, to now the U.S. military is basically seizing control of the area, saying you need to avoid these parts because we're here to help and we're going to do that. And I'm not saying that they shouldn't be there. I want to be really clear about that. What I'm saying is they have not been forthright at all in telling us how bad this was. And I started to see that January 4th, and it started coming out mid-December. And now here it is, home to roost, and we're all surprised by what's going on, right? Not a lot of people had this on their bingo card. So if you take a look at this, this is accelerating. Right? This is getting worse. It's not getting better. We're not even going to get into the fact that Iran and Russia have now come out and said that they're going to help Yemen and what's going on over there. We're not even going to touch that in this video. But I want to show this. Does that look like something that's just going to go away? Right? So this is Yemeni demonstrators hold placards during a protest U.S.-British forces strikes in controlled capital January 12, 2014. The ongoing battles between Israel and the Hamas group in Gaza. So the Israel-Hamas conflict, which is god-awful on no matter what side of that aisle you're on, right? It's just an awful situation, is now spreading to other parts of the globe. This doesn't look like it's like 5,000 or 10,000 people, does it? This looks like a lot of people that are extremely angry about what's going on over there. And so to me, this is just another can of worms that's starting to pick up the pace. And this becomes a real issue, and it's worth spending the time on so that you understand it. So you understand the gravity of the situation, you understand how it was not explained to us accurately to begin with, and then you can start making decisions on how this could impact your trading, not just from a standpoint on Red Sea shipments, but how it could affect inflation for one, how it could affect the goods being delivered. Could this affect luxury goods? Who has the other shipping lanes? There's all kinds of things of this that you have to figure out, and all kinds of things that you have to pay attention to. Please excuse my voice when I went through that. Obviously, I'm going to stop commenting on the voice, but I know it's brutal, and it is getting better. But again, the show goes on. As much as I look at that situation and think it's a hornet's nest, and I really don't know what is right or wrong for the U.S. and U.K. to do in that situation, quite frankly, obviously bombing civilian ships and trying to take control of them is not the right move either, right? But you start looking at names like, and I just pulled this up, and this is American Trading on Another Exchange, and you can start looking at that weekly chart, what's going on there. Right, so you've basically been in a trading range. There's very little to do there, but I would suggest using this. I'm going to give you another one to look at. So you could look at this, okay, and you could keep this as kind of an idea what's going on. The other thing that I think is really interesting is to look at the Baltic Dry Index. Now, why is this imploding? That doesn't really make a lot of sense, does it? Okay, why is this imploding? Why is this coming down so much if they're having so many issues with goods? I don't have an answer to that. But I find that fascinating. Like if you're having an issue coming through, see, Baltic Dry Index tells you how much it costs to ship goods. Guess where? Through the Baltic. So if you're trying to figure this out, going, well, why would this be dropping? I don't have the greatest answer for that, because you would think that the cost of goods would go up. Now, maybe this is going to uptick soon, but this is BDI and this is on TradingView, and I would pay attention to this issue. This is your largest issue right now, in my opinion. This issue and the Taiwanese election, these are the biggest things that are going on right now that can affect the market in ways that you're not even thinking about. And there are parts of this that I don't fully grasp or fully understand, and I'll explain it, but this is exactly where I was going with it when I was explaining this in the room on Friday. But I would be looking at these names, and this is where I'm going with it. There is no way that people that are shipping oil are not going to want to have control of these tankers. They're going to want you to have control. Now, what could happen here is exactly that one slide that I went over. That's why it was so important, and I kept hammering parts of those slides and the wording, and I went through that very meticulously for a reason. If they shut down the Red Sea, or they shut down parts of it, right, and start diverting and saying, no, you can't come through here until we fix this, right? Hello, we're from the government, we're here to help. Until we fix this, well, that's a whole other can of worms, right? TNK, that's another one. If you can't, even if your costs go up, If they say, we don't care that your costs are up or we don't care that you have to get here, we need control of the area until we fix it, right? Fix it. Okay. When you look at it from that standpoint, FRO, TNK, these are all names that you want to pay attention to, right? So there's other shippers out there like Shipper Trading, like GNK. Well, why is that dropping if rates are going to go up? Take a look at ZIM, which is one that we've been playing in the community since down, I don't know, it was like about $9-10 we've been in this thing. And, we're all cheering in here. And one of the things I mentioned on Friday was, and don't get me wrong, this was great, right? It was a great trading opportunity, and we don't chase it. You sell into strength and you buy the dips. And now I'm wondering if I'm getting that devil horns pattern in here. But why could I be getting this? Well, what if they just go to these guys and say, you can't ship this way? And what if the other way that they're going to have to, or you can't transport this way, rather, I apologize. What if they go to these guys and say, you can't go this way, you're going to have to go another way, and what if the costs are so cost prohibitive that these companies lose money instead of make money? Because they can only raise the rates so much in dealing with this issue. And they still have to keep moving, because if they don't keep moving, that they don't make money. Well, that's a whole completely different ball of wax that we haven't thought about. And so it's very important to understand that language that was in some of those slides. You might want to go watch it again. And the reason I'm saying that is you would expect this to explode and be at like $20. That's not what happened. This may have fell off as people started to realize, like, wait a minute, yeah, the costs are going up. Yeah, they're making more money, but now they're being told they have to avoid certain parts of that area. Well, does that become cost prohibitive? I don't have an answer to that. All I can tell you is that when we got back up here again and we reversed, now let's take a look at this during the day and see what happened. All right, that is a complete blow off. You're trying, but look at this. On ZIM, could never get off that open. So for whatever reason, people sold that open and they never came back. So there could be something to what I'm saying. So I would pay attention to this very, very closely. Now, there are a couple other interesting developments that I think we should cover, even though I'm going to consider them very important. I consider them secondary to what is really going on out there with smart money, dumb money, candidly, because I find that fascinating. And the Red Sea issue to me is something that is just a pickle. But there are two other issues, or I'm going to say three other issues that I think are fairly interesting. Taiwan Semi Tuesday, you're going to get earnings. Or Thursday, I apologize. You're going to get earnings. Tuesday morning is going to be really interesting to see what happens here with Taiwan Semi. And this is why. Now, I want to give credit to this person. This is from Arun Pudar. This is not from me. I try to give credit here when I know where these sources come from. So when you could see right in here and see how this is playing out, this is really important. China spent billions to sway the elections. They always do, so they could put someone in there. This gentleman is pretty much the exact opposite of who they would want in there. And you get the response to him getting in was pretty overwhelming. And so this is from Indo-Pacific News, and I'm not going to play the video, but obviously you can see the response there was pretty overwhelming to this guy getting in. So this is exactly the exact opposite of what China wanted from what I'm gathering. Now, why is that important? Because why Taiwan Semi can go up or down on Tuesday on this news, you need to watch what Taiwan Semi does on Tuesday. It's going to be really pertinent. You're also going to have to watch the rhetoric that comes out of China and how they respond to it. All right. So does this mean that we don't see what we were going to think could be an easy transition? Is there not going to be a transition? See, a lot of people think that Taiwan's going to have issues because of all the other conflict in the world, that it would make it very easy for them to have, if they wanted to try to get rid of Taiwan's independence. I'll leave it at that. So this is a pretty easy time for them to do it. It might not be so easy in a year or two. So when there's not other conflicts, I think that's something that you have to consider. I think you want to watch how Taiwan Semi acts on Tuesday. I think this is very pertinent, and I certainly think it's something that you should be paying attention to. Now, this is going to lead us to what I think is another very important issue. Why do I think this is very important? Because people really don't understand what happened with Bitcoin. Quite frankly, they're absolutely clueless and they're not really understanding this. So people are under this impression because you have physical ETFs, they physically have to own Bitcoin. They don't. They go in the futures market. People say, oh, well, they have to be in the spot market. All right, it's called spot. It's the futures market. But if you own a future, you have the right to get that physical asset. Now, the physicality of Bitcoin is a lot easier to control, right? It is just flowing from one to another. If there's ever a run on them, okay? If there's ever a run on them, yes, you could see a spike that would lead to that. But if you don't see a run on them, then you could have the exact opposite happen where you see a dump of Bitcoin. No place was this clearer than what happened in crude oil. And I'm going to give just a real quick lesson on this so people get it. During the pandemic, this is crude oil. You're at -10. That's right, -10. At one point, during the pandemic, they were actually paying you to take physical delivery of oil, paying you to take physical delivery of oil. I want you to remember that. This is when a bunch of people were trying to fill up the Strategic Petroleum Reserve, and for some reason they didn't do it then. This is when a lot of people were out there going, what is going on? Like, it just completely broke, right? And of course, once again, Congress can't get it together, but whatever. If you look at this and say, why did this happen? Why would oil go negative? I'm not saying Bitcoin's going to go negative, but you have to understand the physicality of what a futures market is to understand what's going on. And this is where people lost it on the Bitcoin trade. You physically have to hold it. If that futures market expires and you're in the money, congratulations, you're the proud owner of a barrel of oil. So this is a bunch of people during this week going, for lack of a better term, crap, I'm going to own 1,000 barrels of oil. They're going to deliver this. Where the heck am I going to put it? I understand putting something on a hard drive, right, is a lot easier than taking delivery of a barrel of oil. A matter of fact, you couldn't get more opposite, but you still have to do it. And you still have physicality of the asset. And you might not want physicality of the asset. Hence, you're going to get this kind of stuff when people go, wait a minute, now what happens if it drops and I have physicality of it? I still have to go back and then resell it. And people are like, oh, well, that's easy. Is it easy if it happens to everybody at the same time? See, everyone's on this topic of, oh, there's going to be this massive run. Has anyone thought about the outflows that are going to happen with Coinbase? Has anyone thought about the outflows that are going to happen with GBTC when you have all these other ETFs that you can now use? And let's be really clear about this. They are going to use the futures market. If you don't think that, you really need to start getting back to the basics of understanding what's going on out there. I don't care if you think they're going to or not. I don't care if you think they're going to have huge warehouses where they hold these in cold storage. If you believe that, you're delusional. The only one that was like that was GBTC, where they had to physically hold delivery of those, right? And how's GBTC doing right now? If you want to see if that's what the plan is. Does this look like that's the plan? For them to hold physical delivery? Did GBTC get inflows or outflows? So there's this beautiful spreadsheet that was done. I'm going to give the guy credit here. His name's Eric Balchness, and I'll put him up in a minute because I'm not doing him justice with his name, and my pronunciation skills are absolutely horrendous, as we all know if you've been watching this for some time. But he went through the source of Bloomberg, and he looked at this and said, hey, let's pop him up now so we can give him credit for more than 2 seconds. So I got him. He has a whole piece on this. He's got a whole piece that he did on this. It's actually very, very good. And here's the gentleman's name right up here. Again, I'm not going to butcher it, but this is where I got it from. And he did a very good job, and he outlines it very perfectly what's going on here. I'll leave that up there. So look at the inflows. All right, so if you wanted to buy one of these, which one would you buy? Maybe you'd buy the one with the most inflows. Why would you buy that one? Because they probably has the lowest premium or expense ratio if you really went through them. I don't know that. I'm just saying that it probably does. I haven't done that kind of due diligence on it yet, but this is the one that's got the most assets, the most inflows, right? All right, got it. Who's losing money? GBTC. Who had physical delivery? GBTC. People are saying it's because of the expense ratio. Maybe it is because of the expense ratio, but they're blowing it out at such a rate that they're willing to take a discount to NAV, a discount to NAV. Does that sound like somebody that wants to own physicality? So this is why, and again, he has this whole piece out. You might want to take a look at it. And I was off of Twitter. This is why what people weren't getting that when Mara was coming in, they're not understanding this. We did exceptionally well with this. If you go look at Thursday's video, you'll see it. We shorted this. We did exceptionally well with it. We shorted it yesterday. I did exceptionally well with it. These options, there was even a mispricing of options, and we crushed it. So you can see these right here. Bought coin puts again. These are the timestamps from John. These are the live trading. This is the date yesterday. And I'm just going to leave it all up, and you can tear it apart if you want. But like these are the timestamps, so you can see what I'm doing. I'm actually saying I'm doing. Okay, added to the coin puts again. Bought Tesla puts here, which we're going to go through that trade. You need to understand this trade and why it was so good. Because even though it went against us, we closed half and traded around the position. I'm going to show you how we did that live in a second. But what I want you to get is this, okay? This is where it gets interesting. Don't chase it. Bought coin puts again. But the point of this was these Mara puts were completely, we paid 20 cents for the 20s. And we did exceptionally well with them. To the point when they went up and they were at 50 cents, that was up 100%. We locked in some of the profit on the coin there. But when they were up 100%, I had no interest in doing anything. And I'll just flip to this clearly. I'm not going to have time to edit all this. But You can see here at one point in the day, later in the day, we were up 500% on those. And the coin points we got out of the rest of those here, you can see I bought some docu calls over the weekend. I also bought stock. But we got out of the rest of them at like 400% at the end of the day and 100% and well over 100% on the coin puts. Why? Because people don't truly understand what happened there. And the more you understand this stuff, the more you can do it for the future, okay? If you think, like, that's the point. Like, someone needs to explain to me why you need to own a Coinbase account now. Coinbase said, hey, good news, guys, we're gonna be able to sell those ETFs too. What they did in one fell swoop with these ETFs was give everyone's 401k access to Bitcoin and the idea that you don't need a separate Coinbase account anymore. They literally took the most anti-establishment currency out there and made it the most establishment currency out there. And everybody cheered. And they just got rid of Coinbase in one fell swoop. Why are you going there? You need monkey coin? You need dolphin coin, as I was making a joke? Do you want to go buy your new NFT there because they're doing so well? Like, how do you think this is going to go for Coinbase? You don't need them anymore. The game's over. It's Bitcoin, period. The game's done. It's over. It's Bitcoin. It's not Ethereum. I'm not saying Ethereum can't go up, but the game is over. It's Bitcoin. Okay, and now they've got it in mainstream, and they've got it under the control of BlackRock and JP Morgan and all those firms that all bashed it because they didn't have control of it. Guess who's going to love it now? All those firms are going to love it. Why? They have control of it, right? Wash, rinse, repeat, guys. Same cycle over and over and over again. Coinbase is toast. You want to watch this level right here. If you break 125, your next level on coin is going to be down to here, and you're going to want to watch that 114 and see how that plays out. Now, as far as Coinbase, whether or not you believe that or not, you're going to want to watch those inflows and outflows. It's telling you everything you need to know about which way Bitcoin's going to go and these names are going to go. And if you think that this selling is just beginning, in my opinion, you're not understanding the true story of what happened here. This is what I was saying. There's so many great stories to go over this weekend. It's just fascinating. I love this time. If you take a look at Tesla, we had an exceptional trade on this, and it actually won against us, and then we got back in the trade. You were seeing a lot of this pattern that I'm going to show you, and we're going to walk through this live trade, but I want you to see this pattern, and I appreciate that you are putting up with not only the voice, but the fact that I'm not going to edit these as much anymore, so I can get this kind of information out to you. But this is as clean as it gets, guys. Wicks are what? Price rejection. Look where you got to. Look where you rejected. You can't make that up. We actually shorted this before it even broke VWAP because it was so crystal clear and it made so much sense to do it. And we did exceptionally well with the trade. And then you always want to watch how you're acting at the open. But he's come out now and said a couple things. But before we even get into that, watch this trade play out.
I'm sure that's going to hold. With the 220s going out to next week, or do I just short a bunch of stock here? I need 4 minutes to figure that out. Not going to hold. I really don't see how that's going to hold. I bought the 220s for next week. I have short stock. I don't know how long I'm going to be short stock. I don't know how long I'm going to be in this trade. I have to get through the VWAP. I'm not even through VWAP. I'm trying to get ahead of it. I don't know how long I'm going to be here. This might be super quick. See, I'm trying to get ahead of it because I think it's going to break. Good God, do something. Even stop me. All right, looks like you're going to try. Yep. I'm at a half, lost 20 cents. And they're going to sell right in there. They're finally closed half. I'm trading around positions today because I think they're just playing games. But I think you're just going to sell down all day on some of these names. But let's see. Thoughts on the Tesla puts outstanding for next week? You close them if you want. I mean, there's nothing wrong with just locking it in. You're probably going to here at some point. I mean, if this continues, you're at least going to gap fill, right? Everybody was short, right? They came in, they all covered. I mean, that's what we're seeing right now. So you at least get to the gap fill, right? I mean, it's like one of the most shorted names out there. So everybody covers and then it runs up and then it might roll again. So like when he's gapped down, if you want to get out, you get out while the getting's good. I mean, I don't mind buying new puts going out a week. I closed half of them. Something with the other half. I'll probably hold them over the weekend. I don't see a reason to do anything here with them. Tesla puts I'm doing nothing with. I shorted some Tesla there. Let's see if they're going to roll it right off that wick. Covered a little on that down move there. Not much. I don't want to cover it now until it gets over that level. Get ready to buy more puts too. Might be early. The party. You do as soon as it got there. All they're doing is playing good with short sellers. That's all they're doing here. Ripping them, covered some Tesla right into VWAP. Should cover more. We're going to bounce off of it. This is where it gets interesting. Because you can't even hold here, you should mount some kind of defense. So you got a reversal bar right here, right? Selling down, pops over. Increase volume, trades up, challenges. You should bounce here. I don't want it to, but it should. I just don't really see a reason for me to do much here with this short. I pulled some out. I'm just leaving the short on. Still have the puts. I added to the puts. I mean, there's not really much. This is perfect. Super technical trade. Went right to 125. I'm up on all those Tesla puts. Well, I've got puts all over the place on Tesla. I'm not doing much here. I mean, you start closing like this, realize you're going to get to 223. So like if you're short stock like I am, I might trim some stock. But other than that, I'm not even sure I want to do that. Yeah. I might wait to get to here and see if I break that. I don't know if I'm going to be able to get more off today. The way this is trading, this is getting pretty ugly.
Now, I hope you found that helpful. The most important thing you should be taking away from that trade is that one, yep, you can enter and then have a secondary position and trade around that position. You don't need to keep finding new ideas. You need to keep looking at those ideas and then making decisions if you're right or wrong, and then what is going to make you right or wrong. And that's why I wanted to spend time today going through the Red Sea, the Bitcoin. Instead of getting all like giddy like retail and trying to figure things out and just, oh, this is it, massive optimism, right? No, what you want to do is you want to look at this and say, where could I be wrong? Because if you start looking at these trades and going, well, where could I be wrong? What could happen? What could get me wrong? You might be on the wrong side of the trade. And Dalio talks about this. Jones talks about this all the time. You want to understand if you're wrong. There's nothing wrong with being wrong. Zero. We tie our egos to it, right? And I'm not going to turn this into a psychology lesson, but we tie our egos to it instead of saying, if I understood the second, third, and fourth reason of what could blow up in my face, if I start to see those dominoes fall like Jenga, I can get the heck out of the way. I'd be real careful with Tesla here, with what's happening with Hertz, what's happening with what they're saying with Berlin, and shutting that down. And I think he might be using the Red Sea as an excuse. What you're seeing happen out there, there's a problem on three fronts. You have China he's got to cut the costs again in order to compete. People saying he's doing it for market share. Really, it's the fourth time he's doing it. How many times are people going to buy a car and they could pay 20 grand cheaper a year and a half from now? You look at what they're selling those Hertz for. I mean, they're in the mid-teens after you do the credit. So this is an issue. And a couple of people are saying that this might actually be the year that it does actually crack. It's really hard to justify being up here. This is my target. I do have a short position in it. Let's be real clear about this. But you're really looking at that 209 level. You crack that, you're starting to look at then getting down to 194, 180 again. And this thing can unravel. And you need to pay attention to that. So we went over a bunch of topics today. I hope you found it helpful. That's it.